Hi everyone, this is Ali Hussein Kasim with Ali Talks Tech Weekly Roundup of Africa Tech News. This week, 5 or 6 key significant happenings in the tech ecosystem in Africa. And most of them, interestingly, are fintech oriented. The first one happened today afternoon in Nairobi. AWS, that's Amazon Web Services, opens its Global Research and Development Center. I received an invite, which unfortunately I was not able to attend because of pressing work matters. Let me read you the official invite that I received from my friend Robin Giro, who leads sales for AWS in Eastern Africa. Dear Ali, you are cordially invited to the launch of Amazon Web Services Development Center in Nairobi, Kenya. The Development Center will host AWS research and development teams building new solutions for customers and partners around the world. It will create new, highly skilled jobs in telecommunications, software development, cloud support, and software engineering, and deliver solutions for customers and partners around the world. This is another way that AWS is reinforcing its commitment to invest in Kenya. This launch was officiated by His Excellency Dr. Honorable William Samoei Ruto, President of the Republic of Kenya. This is significantly interesting news because this R&D center is going to not just serve the African continent, but according to my invite, global customers of AWS. Definitely significant news. This comes in the wake of Google announcing the same sometime last year. Also comes in the wake of Microsoft having successfully launched the Microsoft Africa Development Center a couple of years ago. According to my friend Jack Gary, who used to head Microsoft IDC, Microsoft has had close to 500 software engineers in Kenya and across Africa. Significant news. How is this going to impact the cloud computing ecosystem in Kenya and across the African continent? Something that we'll be keeping our eyes on as we move forward. The second news is 3 related announcements in the fintech ecosystem. Number 1, Revio, South African fintech, raises $5.2 million. Stitch, another South African fintech, raises $25 million, both of them dollars, $5.2 million, $25 million. Stitch is their Series A. Both these fintechs are talking about Pan-African payment ecosystem, how to make the payments ecosystem across Africa more homogeneous. How that is going to pan out, your guess is as good as mine. But related, PAPSS, the Pan-African Payment and Settlement System, has announced Kenya as the latest signatory of their agreement to create a uniform payment ecosystem across Africa. This is related news, and this really talks about or informs us around what is potentially seen as one of the biggest issues when it comes to payment rails across Africa. In Africa, you have a couple of different payment rails. Mobile money has become a significant payment system across Africa, but interoperability is still a big issue. PAPSS is really talking about dealing with the traditional payment ecosystem bank to bank. And if you look at the PAPSS agreements with governments, central banks across Africa, you're mostly talking about the national payment systems across the different African countries. Mobile money is now in a number of African countries, including Kenya, has now become part of the de facto national payment system. But how is this going to impact trade across Africa? One of the biggest problems, one of the issues that affects intra-Africa trade is the issue of reserve currencies. The dollar, the pound, the euro. Africa trades less with itself than with the outside world. Only 18% of total African trade is intra-African. And one of the biggest issues is the impediment around money transfer from one country to another. So these initiatives, fragmented as they are all basically looking at how they can fix some of these issues. Is this a fixable problem? Or, as my friend Robert Yawe would say, do we even have a problem? My sense is that the problem with intra-Africa trade may be myriad, but one of the key ones where I sit is about payments. Is it doable? Possibly. My thumbs-up assessment around this is that for us to fix the fragmented payment system in Africa, PAPSS is important for sure. That will make it easier between interbank and possibly include some of the mobile money payments. Any player who wants to fix the Pan-African payment ecosystem will really need to have a very clear and succinct API strategy. The other issue that most players in the payment ecosystem are not really addressing is that I think the days of paying for payments are coming to an end. It's a race to zero. And understanding this from the onset will save people a lot of headaches and a lot of heartaches. These are my initial thoughts as far as the payment ecosystem in Africa, and everyone is trying to play into this into this space. MTN has recently also announced in South Africa a number of initiatives that tell us that their focus on fintech is becoming increasingly more and more focused. If you look at the most recent annual report from MTN, that should also tell you where their focus is. Quite a big percentage of their revenue now is coming from fintech-related revenue or fees, if you want to call that. The last story I want to touch on is close to my heart, close to really happening in Kenya. Kenya has been at the forefront of the fintech growth ecosystem across Africa. And with this, we also have become a pioneer when it comes to data protection, when it comes to how people are handling data, when it comes to how government is regulating data controllers, people who collect data, whether it's individuals or organizations. In the last couple of days, the Kenya Data Commissioner at the Office of the Data Protection Commission has issued scathing reports on a number of players. I'm going to focus on two players in the digital lending space. These players have been fined a couple of million shillings, and mostly the issue is around using people's data, access to people's phone books, and using those to harass people who have allegedly gone rogue with, or rather not paying their loans on time. Now, the problem with quite a number of these players is how they do it. Let me give you a specific example. Customer A owes a certain digital lender a couple of thousand Kenyan shillings. The guy delays in paying or for a couple of days, couple of weeks, or even a month. They start calling you first. You don't pick, or they're not satisfied with your response. What happens? They now have access to your phone book. So they go to your phone book and randomly pick numbers from your phone book. People who they think will pressurize you to pay. They will call those guys and they'll tell them, so-and-so has not paid his loan. Can you get to him? Otherwise, we'll come for you. I'm not saying this from a third-party perspective. I'm saying this because I have been a victim myself. Last year, December, digital service provider, credit service provider calls me and tells me one of your employees has not paid their loans. I'm like, which employee? I said, I don't have that employee name. How about your name is in his phone book? I said, how did you get my number? But he gave your number and your name as a guarantor. I said, but where did I sign as a guarantor? Oh, you must pay for him or you must push him to pay, otherwise we'll harass you. Guys, I promise you, that lady called me 100 times in one day until I had to mulika them. I had to spotlight them on social media. And that's when they stopped. So I know a lot of people on both sides of the divide. Some are saying the data commission is pushing their luck. They're becoming petty. Some are saying, no, guys, we're in the wild, wild west of data usage and data mining and data monetization. We are going to face a situation where you're going to have a lot of rogue players. Let the commission do its work until we get some sanity on how companies, organizations use our data. I want to close it off today, guys. Until next week. Thank you for watching. Thank you for listening.